is George Costanza, a main character in Seinfeld, the sitcom and Google Wallet's first customer featured in the YouTube commercial back in 2011. Our goal is to make it possible for you to add all your payment cards, so you can say goodbye to even the biggest traditional wallets. Commented on the launch of Google Wallet, Osama Badir, then VP of Payments at Google and former PayPal employee. His words were prophetic. Today, half of online purchases and 1/3 of point-of-sale transactions are already powered by various digital wallets. Let's see how digital wallets drive tourism and why they matter for travel businesses. The era of digital wallets started back in 1997, when Coca-Cola built the payment system enabling customers to buy drinks via text messages on their phones. Then, one by one, there appeared specialized services: PayPal in the US, Alipay in China, Gcash in the Philippines, and M-Pesa in Africa, to name just a few. In the early 2010s, tech giants Google and Apple joined the company with their products specific to Android and iOS mobile platforms. By the 2020s, a multitude of local and global digital wallets became the world's leading payment method for e-commerce and POS transactions. COVID-19 contributed to that rise as people were seeking simple, contactless ways to make purchases. The pandemic has come and gone while wallets continue to grow in variety and popularity.
You have like mobile wallets and e-wallets. So e-wallets could be likes of like an PayPal, for instance, historically, or WeChat in China, for instance. Mobile wallets like Apple Pay, Google Pay. Typically, those are for online transactions or point-of-sale transactions in store.
Paul Van Alphen is a travel payment strategist and managing director at Up in the Air, a travel payment consultancy. Mobile wallets that run on mobile devices are literally replacing physical wallets. They enable cashless offline payments via QR codes or near-field communication.
Well, wallets are becoming more and more important, and then there is like the differentiation between the various wallets out there. So you've got the wallets in the likes of a PayPal, you've got the wallets in the likes of an Amadeus and an Outpays, the B2B wallets that they have, and you've got the mobile wallets like the M-Pesas and the Airtels out there. So having those wallets enabled in your payment process basically creates like a broader reach towards your audience in order to complete a payment.
Kort Grasfeld is Vice President of Payments in TerraPay, a global payment platform that maintains 61 direct connections with digital wallets the world over. Digital wallets ensure payment security, simplify transactions, and keep customers coming back. Thanks to unified payment platforms and API technologies, travel agencies can relatively simply jump into this bandwagon and implement wallets into their payment flows. But how to decide which wallet to focus on in the first place? That question is relevant for those travel companies that work on a merchant model. In other words, they're authorized to accept and process payments from travelers and then send money to suppliers.
Selecting the right player depends on the regions you have your partners in. So you have players that might be stronger in LATAM and Africa, where others might be stronger in US and in Southeast Asia. So that's one of the criteria.
Of course, you know where your customers and partners are. So let's dive deeper into the wallet options. The adoption of wallets across the globe largely depends on the payment rails they support. From this perspective, all wallets can be roughly divided into two large groups: card-based wallets and stored value wallets. Card-based wallets basically act as extensions of payment cards. They have no balance of their own, nor do they move funds or deal with any sensitive data. Instead of money or payment credentials, they store a token, a randomly generated string of symbols associated with a particular debit or credit card. Examples: Apple Wallet, Samsung Wallet, and Google Wallet. Imagine a traveler using Apple Wallet to book a hotel through the OTA mobile app. Once the transaction is initiated, the system encrypts a token, producing a unique cryptogram. Then it passes the cryptogram to the OTA. That's why these wallets are also called pass-through wallets. The OTA, in turn, passes the cryptogram to the card network to be decrypted into the token. Then the token goes to an issuing bank which decodes it and checks information against the real card account. If everything is okay, the issuing bank authorizes the transaction and money moves from the traveler's account to the OTA's merchant account. Payment services and associated wallet apps from global tech brands mainly find their customers where developed bank systems exist. The device also matters. Google, native to Android phones, won most online payments in India, Poland, Brazil, and Mexico. At the same time, Apple dominates in richer Western countries, including the United Kingdom, Canada, France, and Australia. In the United States, payment services from Google, Apple, and Samsung have an almost equal number of users. The main limitation of all three wallets is that you can't use funding sources other than credit or debit cards. Some people find it inconvenient. Others just don't have access to traditional financial systems. Stored value wallets solve this problem. Stored value wallets act as a middleman between a customer and a merchant. Unlike card-based products, they keep money digitally and allow people to top up their balance in various ways, like payment cards, bank accounts, peer-to-peer transfers, cash via partner retailers, and more. Besides all that, a phone number or email address is enough to open a wallet account. Now, let's look at how these wallets are distributed across the planet. A popular representative of the stored value family of wallets is PayPal. It works with card payments, but differently than Apple Wallet and its kind. PayPal is a staged wallet, meaning that it divides a card transaction into two stages. At first funding stage, PayPal initiates a transaction using encrypted credentials and withdraws money from the card. At the second payment stage, the wallet settles the transaction with the OTA. It's worth noting that card networks are not typically happy with stage wallets. In this scenario, they have no visibility into the second leg of the transaction and can't collect valuable data about the traveler's buying behavior and the money recipient. With wallets like PayPal, the traveler can also pay directly from the balance, and if it's insufficient, the rest of the sum is automatically retrieved from the preferred card or bank account. PayPal also provides a credit line of its own and its Buy Now, Pay Later option. According to PayPal's study, with BNPL, travelers tend to spend 70% more per transaction. Check out our video on BNPL to learn more about how it impacts travel. With 426 million users globally, PayPal is particularly widespread in Europe, North America, Australia, and Brazil. It's the most popular digital wallet in the USA and Germany. Yet it's by far not in the entire world. Global brands tightly connected with international financial channels don't work for underbanked regions. Tens of millions of people there rely on mobile money stored on their smartphones. Let's talk about mobile wallets from telecom operators and the reasons people use them.
There are still a lot of individuals walking around in Africa without having a bank account available, but they do want to participate in the ecosystem, right? So these wallets make it available in order to let them join the global payment landscape in order to pay their online goods.
The same can be said about other parts of the world, like the Middle East, South and Central America, and Southeast Asia. The penetration of smartphones in underbanked countries is constantly growing, driving the usage of mobile wallets that act as prepaid cards. You need to preload funds before purchasing since there's no way to cover your transaction with a credit line or bank card. Many of these fintech products belong to regional telecom companies. Examples are M-Pesa, MTN Mobile Money, and Orange Money in Africa, Airtel operating across Africa and South Asia, and STC Pay in the Gulf region. Further to the east, in the Asia-Pacific region, is the territory where Superapps dominate. Superapps are stored value wallets with a wide range of additional services, from messaging to food delivery to travel booking. An example of a super app is Kakao Pay. It reigns in South Korea with over 90% of smartphone owners using a wallet daily. Among other things, it provides a pay later option and travel insurance. GrabPay, integrated with an Uber-like taxi hauling service, literally grabbed 35% of the digital payment market in Singapore, while Alipay and WeChat Pay together account for 90% of the Chinese online payment market. WeChat Pay is of special interest to travel businesses catering to Chinese tourists. The giant app enables users to purchase flight tickets and ancillaries, view flight status, check in, and manage frequent flyer miles. So far, we've been looking at digital wallets from the perspective of B2C transactions, when a merchant accepts payments from a customer. However, some wallets can handle B2B payments as well. Traditional forms of B2B payments are checks, bank transfers, and corporate cards. Recently, virtual credit cards have gained traction in relationships between travel sellers and suppliers. Wallets don't see a wide adoption in this realm so far, yet there are a couple of industry-specific solutions OTAs and other players should consider in their payment strategies. The first is IATA EasyPay, designed specifically to purchase airline tickets. It's available to IATA-accredited travel agencies as a faster alternative to the traditional IATA payment mediator, billing and settlement plan, or BSP.
It's a prepaid solution where the travel agency can fund that wallet, and then whenever a booking is made, that money is blocked for that particular booking in the wallet, and then the money is moved out of the wallet, to the airline over the IATA clearing rails. So that's a recent innovation.
The wallet enables smaller travel agencies that lack financial robustness to qualify for BSP to issue tickets. And for the airlines, it's a relatively cheap and cash flow friendly way to accept bookings.
For the airline, that's actually only a win because the money is guaranteed because it's already there. So if the travel agency in the end does not pay for the tickets, that's not happening because it's already there. It's guaranteed. There is no fraud, so that's also good. And the money moves into their accounts relatively quickly. But again, especially the pre-funding, the prepaid part of it pretty much blocks out the large travel agencies because then they're not into that business model. They cannot pre-fund all of that. So it's more like either for small travel agencies or for, let's say, mid-sized travel agencies that do have a limit. They are allowed to process BSP cash, but they have a maximum to it, a remittance holding capacity, I think it's called, and they can then extend that by putting money into the wallet and then go over that capacity and issue more tickets within a certain period or the billing period.
Another travel-specific B2B wallet belongs to Outpace, a payment company owned by Amadeus. Unlike EasyPay, it targets big players handling large volumes of transactions. Outpace Wallet supports both debt and credit cards from MasterCard, Visa, and UATP. Travel agencies can also use it to pay their suppliers with virtual credit cards.
They simplify a lot from a multi-currency perspective since they can deal with over, I guess it's close to 40 currencies to deal with. And that's just like with a very competitive FX rate, you can basically eliminate a lot of costs when you have to basically move funds cross-border by issuing a virtual credit card instead of going through traditional banking rails.
Still, in some cases, B2C wallets are the simplest and the most effective way to pay a supplier.
If you have, for example, your hotel suppliers in Africa or Southeast Asia who are very keen on using their mobile wallets instead, then there's a whole different transaction line applicable than your B2B wallets, which are linked to a credit card or a virtual card. Let's say I'm in Kenya and have an M-Pesa account. Then I would like the online travel agent to pay my transactions directly into my M-Pesa account, because from that account I can easily wire it to my own bank account, or from that point I can continue paying my own suppliers locally.
So, wallets, local and global, web and mobile, B2C and B2B, are changing the way people and companies purchase travel services. But they are a lot more than just a convenient payment method. Their ability to leverage multiple financial instruments, as well as store ID cards, rail tickets, boarding passes, and other essentials, makes them trusted travel companions, credible business partners, and an integral part of the modern travel experience.
This is an organizer, a secretary, and a friend.
There are many more payment options used in travel, and we'll continue to get familiar with them in more detail. Meanwhile, check our videos on virtual credit cards, PCI DSS compliance, and the buy now, pay later trend. See you soon!